Based on the historical data and forecast, Bitcoin shows a generally upward trend with increased volatility. The RSI values fluctuate between 42.2 and 63.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased price volatility. Given this, I propose a portfolio strategy combining RSI, Bollinger Bands, and trend analysis for high returns. First, we will implement a strategy based on the RSI. When the RSI falls below 40, indicating an oversold condition, we will enter a long position at $101,400 plus $100. The stop loss will be set at $100,000 plus $100 below the entry price, and the initial target price will be $111,000 plus $100. Second, we will use the Bollinger Bands to predict price movement. When the price touches the lower band, we will enter a long position at $101,700 plus $100. The stop loss will be set at $100,000 plus $100 below the entry price, and the initial target price will be $112,000 plus $100. Finally, based on the forecast data, the price is expected to continue rising. We will enter a long position at $109,300 plus $100. The stop loss will be set at $108,000 plus $100 below the entry price, and the initial target price will be $114,000 plus $100. We will allocate 40% of the portfolio to the RSI strategy, 30% to the Bollinger Band strategy, and 30% to the trend analysis strategy to maximize returns while managing risk. Based on the historical data and forecast, Ethereum shows a clear upward trend. The price has been consistently making higher highs and higher lows, supported by the forecast data predicting further increases. The RSI values have fluctuated but generally indicate strengthening momentum, with recent readings above 60 suggesting bullish sentiment. The Bollinger Bands have also been widening, indicating increased volatility and potential for price movement. Considering the support price of $2,760, we will implement a strategy combining RSI, Bollinger Bands, and trend analysis to maximize returns. Our strategy will focus on capitalizing on the predicted upward trend. We will initiate a long position when the RSI dips below 30, indicating an oversold condition. Specifically, if the RSI falls to 28, we will enter at $2,780. To manage risk, we will set a stop-loss order at $2,700, just below the lower Bollinger Band. Our target price will be $2,980, aligning with the forecast data and the upper Bollinger Band. If the price reaches $2,980, we will take profit. This strategy combines the momentum signals from the RSI, volatility indicators from the Bollinger Bands, and the overall bullish trend, offering a high probability, high reward opportunity. Based on the historical data and forecast, XRP shows a slight upward trend with price fluctuations. The RSI indicates periods of oversold and overbought conditions, while the Bollinger Bands suggest potential volatility. Considering the support price of $2.24 and resistance price of $2.32, I recommend a combined strategy leveraging RSI and Bollinger Bands. We will initiate a long position when the RSI falls below 37, indicating an oversold condition, and the price touches the bottom of the Bollinger Bands. Specifically, let's enter a long position at $2.08. The stop loss will be set just below the support level at $2.07 to limit potential losses. The initial target price will be at the resistance level of $2.32, aiming for a substantial gain. If the price reaches $2.32, we will adjust the stop loss to break even at $2.08 to protect profits. Furthermore, if the price continues to rise, we can set a second target price at $2.41, which is the top of the Bollinger Bands, to capitalize on further upward momentum. This strategy combines the signals from both technical indicators to maximize profit potential while managing risk effectively. Based on the historical data and forecast, BNB shows a slight upward trend. The RSI consistently stays above 50, indicating a bullish momentum, though it dipped below 50 on May 29 and June 1, presenting potential entry points. The Bollinger Bands show that the price is nearing the upper band, suggesting a possible pullback. Considering these factors, I recommend a long position with a conservative approach. We'll enter a long position at $671, anticipating a continuation of the upward trend. To mitigate risk, place a stop-loss order at $668, just below the established support level. The initial target price is set at $686, aligning with the recent resistance level. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, we'll enter a long position at that price, with a stop-loss at $668 and a target of $686. Conversely, if the price touches the lower Bollinger Band, we'll enter a long position at that price, with a stop-loss at $668 and a target of $686. Given the forecast, the price is expected to rise to $692, so we'll adjust the target price to $692 if the price hits $686 first. This portfolio combines the trend analysis with technical indicators, providing a balanced approach to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana exhibits a clear upward trend. The price has been fluctuating within a defined range, with a support level at $150 and a resistance level at $166. The RSI indicates that the asset is currently neither significantly overbought nor oversold, hovering around 55.0. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential for a short-term bounce. Considering these factors, I recommend a long position with an entry price of $161. The stop-loss should be placed slightly below the support level at $150, specifically at $149, to mitigate potential losses. The target price for this long position will be set at the nearest resistance level, $168. To refine this strategy, we can incorporate the RSI. If the price reaches $168 and the RSI exceeds 80, consider taking partial profits. Conversely, if the price falls to $149, the stop-loss will be triggered, limiting the downside risk. This combined approach, utilizing both price action and technical indicators, aims to maximize potential returns while effectively managing risk. The forecast data suggests a continuation of the upward trend, further supporting this long position. Based on the historical data and forecast, Dogecoin has been in a downtrend with increased volatility. The RSI consistently remains below the 50 mark, indicating a bearish sentiment, with dips below 30 suggesting oversold conditions. The Bollinger Bands show that the price has been trading near the lower band, further confirming the downward trend. The forecast data suggests a slight upward movement in the short term, but the overall trend remains uncertain. Considering these factors, I recommend a contrarian strategy focusing on short-term opportunities. My strategy is to implement a short-term buy position when the RSI reaches an oversold level of 20. The entry price will be $0.192. We will set a stop-loss order at $0.188, just above the support price, to limit potential losses. The initial target price will be $0.198, aligning with the forecast data and the upper end of the recent trading range. If the price hits this target, we will reassess the situation and consider a trailing stop-loss to capture further gains if the upward momentum continues. If the price fails to reach the target and shows signs of reversing, we will exit the position to avoid further losses. This strategy aims to capitalize on short-term bounces while managing risk effectively. Based on the historical data and forecast, TRON shows a slight upward trend. The price has been fluctuating within a range between $0.278 and $0.318. The RSI values are generally above 50, indicating a moderately bullish momentum, but approaching the overbought level of 80 recently. The Bollinger Bands have been narrowing, suggesting a period of consolidation, but the forecast indicates the price is likely to move above the upper band. Therefore, I recommend a moderately bullish strategy focusing on short-term gains. My strategy is to implement a buy position when the RSI falls below 30, which signals an oversold condition. Specifically, I suggest entering a long position at $0.261. The stop-loss should be set slightly below the support level at $0.26 to protect against a potential downside reversal. The initial target price should be $0.297, aligning with the forecast price and the upper Bollinger Band. If the price reaches $0.297, consider moving the stop loss to break even to secure profits and potentially ride the upward momentum further. A secondary target price can be set at $0.303, based on the latest forecast, offering an additional profit opportunity. This strategy combines RSI, Bollinger Bands, and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Cardano has shown a downtrend recently, but the forecast for the next week suggests a potential upward movement. The RSI has been fluctuating below 50, indicating a weak upward momentum. The Bollinger Bands have been narrowing, suggesting a period of consolidation. Considering these factors, I recommend a long position with a cautious approach. We will enter a long position at $0.698. The stop loss will be set at $0.665, just below the recent support level, to limit potential losses if the downtrend continues. The initial target price will be $0.732, aligning with the forecast high for the week and the upper Bollinger Band. To optimize returns, we'll implement a dynamic strategy based on RSI and Bollinger Bands. If the RSI crosses above 50, indicating strengthening upward momentum, we will move the stop loss to the center of the Bollinger Bands, currently around $0.709. If the price reaches $0.732, we will take partial profits and set a new target price at $0.75, aiming to capitalize on further potential upside. This combined strategy allows us to benefit from the predicted upward movement while mitigating risk through strategic stop-loss adjustments and profit-taking measures, ensuring a high-return investment. Based on the historical data and forecast, Sui shows a downtrend with increased volatility. The RSI indicates oversold conditions on several days, particularly around June 9th and 10th, with values below 40. The Bollinger Bands are widening, suggesting increased price fluctuations. Considering the support price of $3.49 and the forecast for the next week, a cautious long strategy is recommended. We will enter a long position at $3.36, placing a stop-loss order at $3.49 to protect against a potential breakdown below the support level. The initial target price will be $3.51, aiming to capture a short-term upward movement. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI rises above 30 and the price touches the lower Bollinger Band, we will enter a long position at $3.37. The stop loss will be set at $3.4, just below the lower Bollinger Band, and the target price will be $3.53, aligning with the forecast price and the upper Bollinger Band. This combined approach leverages both momentum and volatility indicators to maximize potential returns while minimizing risk. The portfolio will prioritize this combined strategy due to its efficiency in capitalizing on both overbought and oversold conditions, supported by the forecast data. Based on the historical data and forecast, Chainlink has shown a fluctuating trend with a clear support level at $13.8 and resistance at $15.5. The RSI indicates periods of oversold conditions, below 38, and overbought conditions, above 56. The Bollinger Bands show that the price has recently been approaching the lower band, suggesting a potential for a rebound. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands. We will initiate a long position when the RSI falls below 38 and the price touches the lower Bollinger Band, aiming to capitalize on a potential bounce. Specifically, we will enter a long position at $12.7 when both conditions are met. The stop loss will be set at $13.1, just below the support level and the lower Bollinger Band, to limit potential losses. The initial target price will be $14.7, aligning with the forecast price for June 11, 2025, and a conservative rebound from the lower Bollinger Band. If the price reaches $14.7, we will move our stop loss to break even at $12.7 and set a second target price at $15.8, based on the forecast price for June 17, 2025. This approach balances risk and reward, aiming for high returns while protecting against significant downside. Based on the historical data and forecast, Arweave has shown considerable volatility, with a recent upward trend observed in the latter half of the period. The RSI consistently fluctuates, but the most recent readings are above 40, suggesting a strengthening momentum. The Bollinger Bands indicate periods of contraction and expansion, with the price currently approaching the upper band. Considering these factors, my strategy will be a combination of RSI and Bollinger Bands, with a focus on capitalizing on potential breakouts. My primary strategy will be to enter a long position at $6.97, coinciding with the first forecast price and a relatively low RSI. The stop loss will be placed at $6.7, slightly below the lower Bollinger Band, to protect against potential downside reversals. The initial target price will be $7.32, aligning with a subsequent forecast price and a reasonable profit margin. If the price reaches $7.32, I will adjust the stop loss to $7.17, near the support level, to secure profits and allow for further upside potential. A secondary target price will be $7.75, the highest forecast price, representing a more ambitious profit goal. This combined strategy leverages both momentum indicators and price action to maximize returns while managing risk effectively. Based on the historical data and forecast, dYdX shows a generally downward trend with recent price fluctuations. The RSI consistently remains below 80, indicating that the asset is not overbought, while occasionally dipping below 40, suggesting oversold conditions. The Bollinger Bands have been contracting recently, which often indicates a period of consolidation before a potential breakout. Considering the support price of $0.587 and the forecast for June 11 at $0.572, a conservative strategy is to look for buying opportunities when the RSI dips below 40 and the price touches the lower Bollinger Band. Therefore, I recommend a strategy focused on capitalizing on potential rebounds from the support level. We will enter a long position when the RSI falls below 30 and the price touches the lower Bollinger Band, specifically when the forecast price reaches $0.572. The entry price will be $0.572. To manage risk, set a stop-loss order at $0.56, just below the lower Bollinger Band. For the target price, we aim for the resistance level of $0.631, offering a potential profit of $0.059. This strategy combines RSI and Bollinger Band signals to confirm potential buying opportunities and provides a clear risk-reward ratio. Based on the historical data and forecast, Optimism has shown significant volatility, with a recent downtrend followed by a potential rebound. The support price consistently holds at $0.621, while the resistance fluctuates around $0.732. The RSI indicates that the asset is currently approaching the oversold territory, with readings generally below 50. The Bollinger Bands suggest a narrowing range, potentially signaling a breakout. Considering these factors, I recommend a moderately aggressive strategy focusing on capitalizing on potential upward momentum. My proposed strategy involves a long position entry at $0.677, coinciding with the first forecast price and a potential bounce from the recent dip. A stop-loss order should be placed at $0.621, aligning with the established support level to limit potential losses. The initial target price is set at $0.737, reflecting the recent resistance level and the forecast price. If the price surpasses $0.737, a trailing stop-loss can be implemented to secure profits while allowing for further gains. This strategy aims to capture potential upside while mitigating downside risk, aligning with a high-return investment approach. Based on the historical data and forecast, Lido DAO shows a volatile trend with periods of consolidation and upward movement. The RSI indicates that the asset has been fluctuating between oversold and overbought conditions, currently nearing the middle range. The Bollinger Bands suggest that the price has been testing the lower band recently, indicating a potential bounce. Considering these factors, I propose a long position strategy with a focus on capitalizing on short-term upward movements. The entry price will be $0.915, coinciding with the first forecast price and a recent price level. A stop-loss will be placed at $0.885, just below the support level, to limit potential losses. The initial target price will be $0.978, aligning with the forecast price and the upper Bollinger Band, aiming for a quick profit. To refine this strategy, I'll incorporate a dynamic target adjustment based on RSI and Bollinger Bands. If the price reaches $0.978 and the RSI exceeds 70, indicating an overbought condition, I will adjust the target price to $1.01, aligning with the subsequent forecast price. If the price falls back to the lower Bollinger Band, I will lower the stop loss to $0.863. This adaptive approach allows for maximizing gains while minimizing risks, capitalizing on the predicted upward trend while accounting for potential volatility. This strategy aims for a high return, short-term investment with clearly defined entry, stop loss, and target points. Based on the historical data and forecast, Pudgy Penguin shows a fluctuating trend with a recent bounce from the support price of $0.0101. The RSI is currently at 56.4, indicating an overbought condition, which suggests a potential pullback. The Bollinger Bands show that the price is approaching the upper band, further supporting the possibility of a short-term correction. Considering these factors, I recommend a short-term short position with an entry price of $0.0123. To manage risk, set a stop loss slightly above the upper Bollinger Band at $0.0144. The initial target price should be near the support level at $0.0101, aiming for a quick profit from the anticipated retracement. However, if the price breaks through the upper Bollinger Band and the RSI remains above 80, a long position could be considered. In this scenario, enter a long position at $0.0114, place a stop loss below the lower Bollinger Band at $0.00838, and set a target price at the resistance level of $0.0146. Combining both strategies, a portfolio with 60% short position and 40% long position is suggested to balance risk and maximize potential returns. This diversified approach allows for profit regardless of the short-term price direction while mitigating potential losses. Based on the historical data and forecast, Arbitrum demonstrates a fluctuating trend with a recent upward bias. The support price remains consistently at $0.392, while the resistance sits at $0.457. The RSI fluctuates between 38.3 and 59.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands show a narrowing range recently, suggesting decreasing volatility. Considering this, I recommend a strategy combining RSI and Bollinger Band signals. We will implement a combined strategy. First, we will look for opportunities when the RSI dips below 30, signaling an oversold condition, and the price touches the lower Bollinger Band. When the RSI is 38.3 on June 10, 2025, and the price is near the lower Bollinger Band of $0.308, enter a long position at $0.31. Set a stop-loss order at $0.29, just below the lower Bollinger Band, to protect against unexpected downside. The initial target price will be $0.41, aligning with the recent center of the Bollinger Bands. If the price breaks through the resistance of $0.457, move the target price to $0.46. This combined approach leverages both momentum and volatility indicators for a potentially high return strategy. Based on the historical data and forecast, Jito demonstrates a clear uptrend, particularly evident in the recent surge to $2.21. The forecast for the next week projects continued upward momentum, reaching $2.31. Considering the RSI values, the asset has moved out of oversold territory and is approaching overbought levels, currently at 64.9. The Bollinger Bands indicate that the price is trending above the middle band, confirming the bullish sentiment. Therefore, I recommend a long position strategy. My proposed strategy involves entering a long position at $2.04. Given the strong upward trend and the forecast, a conservative stop-loss should be placed at $2 to protect against unexpected downturns. The initial target price is set at $2.21, aligning with the recent high and the forecast peak. If the price continues to rise, a second target price can be established at $2.31, based on the forecast. This strategy combines technical indicators and price forecasts to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Compound exhibits a strong upward trend. The price has consistently broken through resistance levels, and the forecast suggests continued growth. The RSI values have been fluctuating, but recently crossed above 70, indicating an overbought condition. However, given the overall bullish momentum and the forecast, I recommend a long position. The entry price should be $52.4, coinciding with the first forecast price. A stop loss should be placed at $49, just below the lower Bollinger Band, to protect against a sudden downturn. The initial target price is $58.2, aligning with the forecast price and providing a reasonable profit margin. To maximize potential returns, I suggest a tiered target strategy. After reaching $58.2, move the stop loss to the entry price of $52.4 to secure profits and reduce risk. The next target price is $60.3 based on the forecast. If that target is reached, move the stop loss to $56.7. Finally, the ultimate target price is $63.8, the last forecast price. This strategy combines RSI, Bollinger Bands, and forecast data to create a high probability, high reward investment opportunity, carefully managing risk along the way. Based on the historical data and forecast, Uniswap shows a clear upward trend, especially with the recent jump to $8.6. The RSI indicates that the asset was oversold on June 9, 2025, at 45.5, and is now approaching overbought territory on June 10, 2025, at 72.7. Considering the forecast prices, which consistently predict increases, and the Bollinger Band showing a widening range, indicating increasing volatility and potential for price movement, I recommend a long position. Specifically, enter a long position at $7.39, placing a stop loss at $7.06, just below the support price, to protect against a potential pullback. The initial target price is $8.41, aligning with the forecast for June 16, 2025. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 20, which hasn't occurred recently, we would consider a long entry. Conversely, if the RSI exceeds 80, we would consider taking profits or reducing exposure. If the price touches the lower Bollinger Band, it suggests a potential buying opportunity. If the price breaks above the upper Bollinger Band, it indicates strong momentum and potential for further gains. Therefore, after reaching the initial target price of $8.41, we will reevaluate. If the price continues to climb and the RSI remains below 80, we will extend the target price to $8.9, aligning with the forecast for June 17, 2025. This dynamic approach combines trend analysis, technical indicators, and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Axelar shows a clear upward trend. The RSI has been fluctuating, but recently crossed into overbought territory on June 10, 2025, at 76.8, suggesting a potential pullback before further gains. The Bollinger Bands have been widening, indicating increased volatility and a potential breakout. The forecast predicts a steady rise from $0.382 to $0.49 over the next week. Considering these factors, I recommend a long position strategy with an entry price of $0.382. A stop loss should be placed slightly below the lower Bollinger Band at $0.36 to mitigate potential downside risk. The initial target price should be $0.451, aligning with the forecast and the upper Bollinger Band. To maximize potential returns, I suggest a dynamic target price adjustment. Once the price reaches $0.451, consider moving the stop loss to break even to protect profits. If the price continues to rise, adjust the target price to $0.49 based on the forecast. If the price shows signs of reversal, such as a decline below the center of the Bollinger Bands, consider exiting the position. This strategy combines RSI, Bollinger Bands, and forecast data to capitalize on the upward trend while managing risk effectively. The portfolio will be 60% long Axelar, 20% in stable coins, and 20% in other altcoins to diversify the risk.